If you've looked at payment fraud software in the last year, you've probably noticed something. A lot of these tools advertise the same things: real-time alerts, fraud detection, AI-powered risk scoring. Sounds familiar across the board. Most of them are checking whether a payment looks normal compared to your past behavior. That's useful. It's also not the thing that actually stops business email compromise. I'm going to walk through the 3 questions fraud analysts say actually separate software that stops BEC from software that just flags it after the fact. How they verify a vendor, how they handle alerts, and what they leave behind for your auditors. Business email compromise is built to look exactly like a normal business process. A fraudster compromises or imitates a vendor's email, sends a routine-looking bank detail change, and the next payment goes out through your standard approval flow. Nothing about it tips a behavioral red flag because the request matches how that vendor relationship has always worked. That's why a lot of fraud software misses it. Risk scoring compares a transaction to historical patterns. A BEC payment matches the historical pattern almost perfectly. The thing it doesn't check is if the account on the other end of that bank detail change actually still belongs to the vendor. Everything in this video comes from fraud analysts at payment protection platform F-Sure. In other words, the people who watch BEC slip through software like this every day. Organizations reported $3 billion in BEC losses to the FBI in 2025, and many of those organizations had fraud prevention controls already running. The losses happened because the control checked the transaction, not the account ownership behind it. So the first check to run on any vendor: does the software confirm the account belongs to the vendor, or only that the account is valid? Those are completely different checks, and the difference is exactly where BEC slips through. A bank account can exist and pass every formatting check and still belong to the wrong person. Most accounting software and basic fraud tools can match new data against existing records, but they can't independently confirm ownership because they're checking your own system against itself. What you want is a platform that cross-references vendor and bank details against an independent verification source built from customer verified data, vendor verified data, and public business registries, not just your internal records. F-Sure shows this as a simple verified or not verified indicator, sitting right where you're approving the payment, not buried in a separate risk dashboard you have to go and check. Second check: when does the software actually alert you, and through what channel? A lot of tools only check at onboarding. After that, the vendor record sits untouched, sometimes for years. The stronger model alerts at every point where risk actually enters: at onboarding, at any bank detail change, before a payment file gets uploaded, and again at the point of payment, right inside your banking environment. And that last one matters most because it catches the case where everything upstream looked fine and the actual account still doesn't match. And the verification itself has to run through a channel the fraudster doesn't control. A callback number supplied inside the same email that's trying to defraud you isn't independent verification. It's just a more convincing version of the same attack. Look for software that sources its own confirmation contact separately from anything the request itself provided. Third check, and the one people run last, even though auditors check it first: what record does the software actually produce? You want a time-stamped, attributed log of every check, every flag, every approval, not just a summary you'd have to reconstruct from emails and spreadsheets after the fact. Two-factor authentication compliance, failed verification attempts, completed onboardings, all logged automatically as they happen. This matters beyond the audit itself. If a payment does go wrong, the speed of your response depends on how fast you can show exactly what was checked and when. A platform that builds the audit trail as a byproduct of verification rather than as a separate reporting step gets you that answer in minutes instead of days. So when you're comparing payment fraud software for BEC specifically, 3 checks cut through the marketing fast. Does it verify account ownership, not just account validity? Does it alert through a channel the request itself doesn't control? And does it check at every stage, not just at onboarding? And does it produce a time-stamped audit trail automatically without your team building one by hand? Software that answers yes to all three is built around the actual mechanism of BEC. Software that answers yes to one or two is built around fraud in general, which is a different problem with a different fix. If you want to see how F-Sure scores against these three checks on your own vendor file, there's a demo link below. And if this helped you cut through the noise, subscribe.